Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend, the commodities investing legend. He is also the founder of Rule Investment Media and was the former CEO of Sprott. Rick Rule, welcome back, sir.
Ivan, pleasure to be with you. Thank you for letting me talk to you and your audience.
Yeah, it's always a pleasure having you come down to Wall Street Silver. I wanted to bring you on to talk about all the craziness that's happening in the precious metals market. A lot of people lately online have been talking about why is, the gold prices are going higher, but you see the divergence in silver prices in the mining sector. What are you seeing right there? Why is silver and gold lagging?
Well, let's unpack that. Let's make one question into sort of four questions. I think you are starting to see a movement in the gold price, and I think it's delayed. I think the circumstances that are conducive to a move in the gold price have been around for 3 or 4 years. They're not new, but the response to the market is new. People's expectation of the future is set in the immediate, not the distant past, and not around history. We've been through 40 years of benign economic climate, ending, I believe, in 2022. And I think it's taken the market a while to react to negative real interest rates, to inflation, to debt and deficits. And I think it's that dawning realization, particularly among non-US centric central banks, to understand that gold is an important portfolio diversifier. And Ivan, I want to say right now that as an investor myself, as a speculator, I don't care at all about the movement of gold from $2,000 to $2,150 or $2,200.
Right.
I own gold personally because I'm afraid it's going to go to $7,000 or $8,000. The move that we've seen so far may be the end of the move. I don't know. That's not why I own gold. I don't own it as a trading sardine. Uh, I own it as an eating sardine.
Yeah, that's right.
And I really, truly do not own it because I think it might go to 2,500. So let's talk about that. Let's get that out of the way, first of all.
Right.
The frustration around the silver speculators has occurred for as long as I have been on Earth. I don't know why. I have my suspicions, but momentum in a precious metals market is established by gold, perhaps because the fear buyer is more motivated than the greed buyer.
Right.
After gold has moved, then in the middle of a gold bull market, when the narrative has been established by gold, silver, perhaps because of its lower unit price, moves later. It moves further and it moves faster once it moved. But in every market that I've been around, except for the false breakout, the sort of Reddit precious metals breakout
Right.
in 2020, when the speculative stocks led all the commodities, I've never seen a market where gold didn't have to establish the momentum and silver to fall in. Make no mistake, in my experience, and I've been through several bull markets, if the momentum gets established by by gold, silver will exceed all but the greediest of expectations.
Right.
It'll just take a while. Now, let's go to the delta between the metal performance and the share price performance. First of all, this is consistent with all prior bull markets. The metals have to lead. It's important to know that when the metals lead, there's a lag. In the case of the gold price moving up from, say, a year ago at $1,850 to $2,150, what people need to understand is that although the gold prices moved up, the prices of consumables, the prices of the cost of producing gold has also moved up.
Oh,
So the
really?
margins haven't moved up in lockstep with the gold price. It's important to know that. If you look at the cash flow statements, the quarterly cash flow statements of major gold producers, although the gold price has moved up, it hasn't yet been reflected
Why
in
why is that, Rick? Sorry to cut you off. Like, why do you see that,
prices.
even
Prices for labor have been going up.
okay.
Social rents, including taxes, have been going up. Energy costs have been going up, and the price of consumables like cement and steel have
Yeah.
gone up.
Yeah.
So it hasn't yet been reflected in the margins because costs have gone up the same way that prices have gone up. Make no mistake, it will be reflected if we keep these prices, but it hasn't been reflected yet. The ugly truth, too, that's really important for your listeners to understand is that the historic performance of the sector as companies, not as gold companies, but as companies, has been dismal.
Yeah.
In the year 2000 to 2010, the decade, pardon me, the gold price goes from what, $250 to $1,900, a seven-fold increase. And the free cash flow per share of companies on the Philadelphia Gold and Silver Index fell.
Hmm.
It took skill to turn a seven-fold increase in the selling price of the commodity into a decrease in free cash flow. Now, my hope is that the managements who presided over that have all been thanked and excused.
Right.
And investors are holding the industry to higher account. But my suggestion to your listeners is that their first investment in gold and silver has to be in themselves. Because if you invest in the sector itself over 2 decades, you will go broke.
Wow.
You need to invest in individual people, in individual companies. Because about, I don't know, maybe 20% of the majors and maybe 3% of the juniors generate enough performance that they add legitimacy and even luster to a sector that's performed as horrifically as mining has in the past. I've managed to make a lot of money
Mm-hmm.
as a mining investor and a lot of speculators. It's been a lot of work, and I've had to be very patient. But you won't find me buying the whole sector. I've learned. I buy individual companies, and I invested in myself for at least 10 years before I learned how to do it. Your listeners are going to have to learn to invest in themselves too, so that they understand how, in movie parlance, to separate the good from the bad and the ugly.
Yeah, so that's like perfectly said, Rick. So when you're investing in yourself and you're looking at a mining company, what's the first thing you look at when you look at the management? Do you want to see like no debt? What are the top 5 things you look at?
Well, management is the first. I
Yeah.
want to be associated with managers who have been successful in the past
Yeah.
and successful in approximately the same thing that they're doing today. If management describes their success as having operated a gold mine in Archean 2 billion-year-old terrain in French-speaking Quebec, but what they're doing is exploring rather than producing for copper gold in 15 million-year-old accreted terrain in Spanish-speaking Peru, the skill sets aren't transferable.
Right, right.
So the skill sets around the people must be appropriate to the task at hand. I think, too, that people need to invest in scale. Everything that can go wrong with a big mine can go wrong with a small mine,
Hmm.
but a small mine can never make you big money. Too many investors screw around with stuff that doesn't matter, and small mines don't matter. If you're going to take big risks for big money. Specifically, if the target doesn't have an in situ value of recoverable minerals exceeding $2.5 billion, say a 1 million-ounce gold deposit or an 80 million-ounce silver deposit, don't bother.
Right.
Just don't bother. Then it becomes all common sense. In the exploration business, really what you're doing is employing technology to answer unanswered questions. What's the most important unanswered question? How long does it take? What's the probability of a yes answer? What's a yes answer worth? How much money will it take? And do you have enough money to get me to a yes answer? This is common sense.
Right.
Most speculators employ a strategy called got a hunch, bet a bunch. They assume because silver is on the name of a share certificate somewhere that the company has silver rather than looking for silver.
Hmm.
If the silver price goes up and you don't have any silver, what difference does it make?
Yeah, nothing.
None whatsoever. That's how people need to invest in themselves.
Wow, that's phenomenal. You said that. Thank you for teaching our listeners that, Rick. And I wanted to get into something before you go off is your rule symposium. You know, you have a virtual one, and I really wanted to get into that. Can you explain to our audience what's happening there?
Yeah, I actually have 3 things I want to talk to your audience about. The first is rural investment media. If you care what I have to say about natural resource stocks, I'll make it personal. List your natural resource stocks at Rural Investment Media, and I'll personally rank them 1 to 10, ruleinvestmentmedia.com. I'll rank your portfolio for free, no obligation. If you want to make yourself a better investor, go to Rule Classroom. We have 200 hours of instructional material for free
Wow.
that will help you differentiate between the good, the bad, and the ugly. Things like how to interrogate a mining company, things like royalty and streaming. In terms of specific offerings that aren't free, we have two series. One are the boot camps. In a boot camp, we take between 8.5 hours in a day online, and we do a deep dive into one topic. You may recall we did uranium 2.5 years ago. Very good
Right.
time to have done it. We did a silver boot camp. We did a royalty and streaming boot camp. We did a developers boot camp. The one we have upcoming, I'm really excited. It's about exploration.
Mm,
People hate exploration right now. And there's nothing I love so much as hate. When people hate a topic, they're out of the market, and that market is available to me cheaply. But make no mistake, we've underemphasized exploration for 30 years.
right.
There are billions of dollars that are going to go into reestablishing the supply chain, and they're going to go through a very few companies. We're going to tell you how and why. 8.5 hours, you'll have access to the recordings for a year. You're going to need them. There's no way in 8 hours you're going to absorb all the information that we force into you. $99. If you aren't absolutely, positively happy with it, there's a gold-plated money-back guarantee, which is to say the $99 risk is mine, not yours.
Nice.
That's coming up. Beyond that, of course, is the granddaddy of our products, which is the Rural Natural Resources Investment Symposium. We've been putting on this symposium for about 30 years.
Mm-hmm.
It's easily the most successful and the finest, I believe, natural resource investment symposium in the world. It's in Boca Raton, Florida, July 7 to 11. We have great big picture speakers, the Jim Rickards of the world, the Daniela DiMartino Booths of the world, the Nomi
Nice.
Prinzes of the world. People who tell you about the way the world really is, not the way CNBC or CBC tells you it is, but the way the world really is. But beyond that, we have wonderful investment analysts and portfolio managers, people who've been in natural resource investing for 30 or 40 years, telling you how that big picture manifests itself in your own portfolio. Beyond that, we have the living legends, serially successful entrepreneurs who will tell you on stage how they built multi-billion-dollar natural resource companies from scratch.
Wow.
And more importantly, how the lessons that they learned building those companies can make you a better investor or speculator. And where the rubber meets the road, we'll have 50 public company exhibitors, each of whom are owned in accounts owned and managed by myself. Sadly, Ivan, there's no guarantee because I buy a stock, it goes up. But at every other investment conference I know, the requirement to be an exhibitor is simply a check that cashes.
Right.
Our attendees have told us for 30 years that exhibitors are content too. And so we vet the exhibitors the same way we vet the sponsors. We are comfortable enough with the content that we're offering that, again, there's a money-back guarantee. You can come to the conference live in Boca Raton, or if you can't come to Boca Raton, sign up for the live stream. You can enjoy the conference from the comfort of your own home. Live is always better because there's a whole bunch of conversations that take place off camera that you
Yeah,
won't
of
see. But
course.
if you're unable to come to Boca Raton, 1,000 people last year enjoyed the conference. Whether or not you attend live or live stream, the conference recordings will be available to you for a full year. And once again, we're confident enough in our content that either live or live stream attendance comes with a gold-plated money-back guarantee. If you feel for any reason that you didn't get your money's worth, email me and I'll give you your money back.
That's very nice of you, Rick. I'll put all the descriptions in the link below for everyone so you guys can get all that information or you'd like to sign up. And Rick, I wanted to talk to you about too a little bit about the before you go, commercial banking. You know, there's the bank fund term lending program that's ending right away, and you see a lot of people online talking about, you know, there's not just small banks, regional banks in the US that put lots of money into the commercial real estate that are on their books. It's unrealized losses, but there's also major banks like Bank of America and so on. What do you see there? Do you see any issues there?
Yes, I do. I see more upheaval for commercial banking in the United States. By the way, I don't see the banking industry as a whole go away, but I see a tough time for taxpayers bailing out banks. I see an inconvenient time for borrowers. going to banks that have traditionally supplied them with money because the banks are running out of money. I see at least three problems in banking. Commercial real estate, of course, looms
Hmm.
large. The second is the time spread. Banks lending money long and funding that with overnight deposits.
Yeah.
When the interest rate goes up, of course, their cost of capital goes up, while the capitalized value of their loans goes down. That's why Bank of America has been having problems. But the third problem is probably the largest, which is to say the structure of the American banking industry has gotten very, very, very stupid. We're an overbranched country. I went into my bank branch a few weeks ago and asked the manager, very nice woman, by the way, about their deposit products.
Hmm.
Turned out they had 15, and she didn't know enough about any of them to tell me. She pointed me to a white service telephone. That branch is costing the bank 140 basis points, 1.4%. And it isn't delivering anybody the value.
Right.
The second thing is that bankers try to be more things than they are. They try to lend to industries that they don't understand. The idea that Bank of America can bank 1,000 industries presumes that they know 1,000 industries well, presumes that they know the value of the collateral in those industries. Years ago, a community bank would lend to the industries present in that community, borrow from members of the community, and lend to members of the same community
Hmm.
based on local knowledge. That isn't the way the banking business works anymore. We need to return to basic banking. And you, as a depositor, need to pay particular attention to your deposits. Did you know that of the 15 deposits that my financial supermarket proposed to offer me, 4 of them proposed to pay me no interest whatsoever? No interest whatsoever. Now,
What's the
whose
point?
possible interest could a banking product be in that purported to pay me no interest? And by the way, I'm a damn good customer.
Yeah.
Uh, you need to pay attention to that. The idea that they don't pay you interest on the free cash balance in your checking account
Yeah, it doesn't make sense. Why would you
is
put
an
your money there?
insanity. They're
Yeah.
they're taking risk with it. They're getting paid. Why shouldn't you? Most investors, I'm afraid, make the basic mistake of not understanding anything about the relationship they have with their bank. And most banking investors are as dumb as most mining investors. They don't understand enough about the basic business that they're investing in to make the investment. So, once again, with banking, make your first investment in yourself. Get a
Mhm.
statement of financial condition from your bank. If you're invested in banks, read the balance sheet,
Yeah.
read the income statement, learn something about the concentration of commercial loans, learn something about their lending programs and whether they're lending to businesses that they understand. Learn in particular the spread between the duration on their loans and the duration on their deposits. That mismatch in assets and liabilities is precisely what brought down the savings and loan industry. It brought down Silicon Valley Bank. It brought down First Republic Bank.
Yeah.
It,
It'll probably
I
bring
mean,
down a lot more banks coming soon.
this is basic stuff. And by the way, there's a whole bunch of good banks out there. It's up to you to know the difference between the good ones and the bad ones. By the way, you can see my shirt.
Yeah, Battle
Uh,
Bank.
if for any reason you're unhappy with your current bank, which I suspect means everybody who's listening to this broadcast, go to battlebank.com or go to ruleinvestmentmedia.com and in the question and comment section, write bank. We're battling for better banking. We've done it before. We're going to do it again. There's no reason to be stupid. Trust me, we're not going to be stupid.
You know, Rick, it's such a huge pleasure you coming down to Wall Street Silver and speaking to everyone. And hopefully, as the market develops, we'd love to have you back on to speak to everyone.
I'll come back on anytime, Ivan. Thank you.
Ah, thank you so much, Rick. Talk to you soon.
Thank you.